Hi friends, Simit here from InformedTrades.com. Today's Monday, August 18th, 2014. Time for our daily Forex chart review. In these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets. So you can sort of watch me trade, learn from my successes, learn from my mistakes, and learn from the benefits or disadvantages of my process. These are real trades. I have my entire trading record on my blog over at informedtrades.com. They're also verified. All the trades are verified by myfxbook.com, a trade verification service. If any of the information I'm presenting is unfamiliar to you, we have a huge learning section on informedtrades.com that covers a lot of the basics of technical analysis, covering other styles of markets, fundamental analysis, many approaches to trading. Check it out, share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. First up, as is customary, is a look at gold. Gold is now below the 50 simple moving average and the 200 exponential moving average. 2 consecutive down days. It did turn out, I mentioned last week that this candle here, the August 8th candle, inverted hammer off the 200 exponential moving average, also a support level, excuse me, a resistance level that was established a bit here, established here definitely in May. Turns out that this was a distribution pattern. After we had the inverted hammer off the 200 exponential moving average, was a resistance level of sorts. We saw a small range form, a narrow range. That's often indicative of distribution, meaning sellers are quietly unloading. Which, and when we see that, we know a bigger move down is coming. So that pattern sort of has played out. How much further is there to the downside? Well, we do have strong support at 1280, right? We did see the market bounce off 1280 here. We saw it here, 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 and we saw it a bit here. So we also saw it serve as a resistance level back here. So the market has shown the sensitivity to the level 1280. I think that would be the next logical target. I think that's where the momentum may take us. Let's see what happens at 1280 if we see some reversal candlesticks there. Of course, as I mentioned in all these sessions, I'm bullish on gold over the long term. I'm still, even though we're discussing the technicals day to day, I'm more interested in the weekly, monthly outlook. I'm happy to buy at these levels with the anticipation of holding for several years, and also under the belief that the expectation that gold is going to go well beyond its 2011 highs of right around 1920 per ounce. Okay, so that's gold. Bitcoin continues to struggle, and this is a prime example of, once a trend continues until it stops, which sounds like a silly statement, or perhaps self-evident in some ways. But what that means is really there are some disadvantages to speculating against the trend. The trend is your friend. That's another adage. So we've seen a downtrend in place. Definitely, I think you could make the earliest you could make a case for a downtrend being in place was early July. Because here we reached this high here, then we fell a little bit. There was a pullback. Now you could argue that this was just a pullback in an uptrend, but once we came here and we had a second swing high that was lower than the previous high, and then it's like, all right, now maybe this isn't just a pullback in a uptrend. Maybe it's the start of a downtrend. And since then we've seen lower and lower highs, and that's sort of the trend. Now this downward trend has momentum. We've seen that quite a bit over the past couple days. We are at 458. I got long right around here at 522, but I got long way back here. So I've seen it go up quite a bit from where I entered. Now it's below where I entered. I'm treating this like an educated lottery ticket. I entered at this level because I thought it was a good entry point. I'm willing to risk. It's only a small position. I'm willing to risk it entirely. So if it goes to zero, that's I'm prepared for that. That's obviously not preferred, but on the flip side, I do anticipate holding it to 5,200. So for me, that's sort of the way I'm looking at it. But in terms of from a trading perspective, momentum is definitely bearish, right? So if you're, the most I would think at if I were trading this would be to look for a pullback and an opportunity to short it. In fact, let's see. Let me just add some. Oh. These charts from TradingView, by the way, I really appreciate those charts. Okay, so if we were to do a Fibonacci retracement, yeah, if we pull back to 560, that's actually a really great level because we have support here, will be resistance on the way back up. But you can see that level was established quite a bit. Plus we have the 200 exponential moving average there. If price can pull up to 560, I think you'd have a great chance to short, a great swing point to short from. But anyway, that's Bitcoin. Trend is definitely bearish there. Now on to the Forex trades that I have on at the moment. I am long Euro Kiwi. Oh no, I'm sorry. I'm short Euro Kiwi. Big difference there. Let me just get my, yeah, okay. So this position is slightly in the money. We've had a couple up days in a row. That's a little concerning. I don't think it's time to move to break even just yet. My stop is at 59.21. I entered at 58.21. I'm going to leave things as is. If price can close at or below 56.76, then I would love to move my stop to break even. So as I mentioned, I'll move my stop to break even when the market clears a support or resistance level between where I entered and my target profit. So I entered at 58.21. My target profit is 54.03. What is a support level between the entry and the target profit? The first one that's of some significance, and that I would say is 56.76 based on the price action here. We bounced up to it, bounced right back off. We've seen the market treat it a little bit like support since it closed above it, right? We've sort of bounced off it here, bounced off it here a little bit. But I think the biggest sign is this candlestick, these candlesticks right here. Tweezer pattern, June 24th and June 25th. That sort of established 56.76. So if we can close below that support level, then I'll move my stop from 59.21 down to 58.21. And that trade will have been de-risked, so I won't be losing any money on that trade anymore. Right now, I still have capital at risk. If the market spikes all the way up to 59.21, I'll get taken out for a bit of a loss. That's Euro Kiwi. Kiwi Yen. Okay, I am long Kiwi Yen. So in both these trades, I'm speculating in a rally in the New Zealand dollar. That the New Zealand dollar has been the source of most of my losses over the past couple months. I've lost almost 1.5% trading, but I'm earning that back. And I'm still right now. It's like 0.2% below break even for the year. So I'm not positive. That's obviously you want to be very much in the money, but at least it's near break even. So still have time. A couple good trades at the end over the next few months, and I should have be a little further into the money. That's the goal at least. Kiwi Yen. We are along here 86.36. Actually, it's 86.30. I was long at 86.30. Yeah, long 86.30. Stop at 85.45. Let me actually adjust this black line. I don't know why it says 86.36. Should be 86.30. Oh. Okay, long at 86.30. Stop at 85.45. So what's that? 50, 80, 85 pips. Yeah, we did touch the break-even point, 87.26. So part of me is tempted to move this to break even. I won't just yet. Let's see how it fares. I'll keep things as is. So both these positions, they're going well so far, or reasonably well. They're in the money at least. That's nice, but not out of the woods yet. Not able to move to break even yet. We did touch that level. We are seeing a little bit of strength today. So hopefully we can close above 87.26. I'll move my stop from 85.45 up to 86.30, move to break even there. That's Kiwi Yen, so no action on Euro Kiwi or Kiwi Yen, just sort of sitting and watching. Canada Swiss is the third pair I had on today. And this position is slightly in the money. It's a little less, let's zoom in a little bit. There we go. It's a little, you can see it's in the money, a little less than, not by much. But we do have, my stop is at, so this one has also not been de-risked. There's a chance to de-risk it. Oh, actually, Well, I did have this orange line here, but I really think that's a little close. I think I should move it to down here. I think that's a better spot to put it at. And that's sort of based on this price action, this level here, obviously this candlestick here, and down here. So I am moving the de-risk point down a little bit, 82.42. It's not prudent, there's some subjectivity here, at least in my approach, as to when to de-risk, when to move the stop to break even. I'm trying to evaluate it based on support and resistance levels. there's obviously some subjectivity there, and I want to make sure that I'm not being too quick to move it, and at the same time not too slow. So there's that, subjectivity and appropriate sense of balance. It can be a little tricky. You have to make sure your emotions don't come into play in that type of situation, or that you're not being irrational, that you're making a logical decision. I think it makes more sense to give myself a little more room here before quickly moving to break even. This position is only very slightly in the money. It's basically at my entry point. So I'm not really going to take action here. What is comforting is that between my entry point and the stop loss is the 50 simple and 200 exponential moving average. So having those two key moving averages between my entry and my stop gives me a little bit more of a buffer. So that's nice. That leads me to think it's going to take the market a bit more effort to get to the stop level. I feel like that's some protection. And because I have that protection there, I'm a little more comfortable moving my break-even point a little bit further down. So let this trade breathe a little bit. I'm going to play out a little more. And that's sort of it for the trades that I have on. I just have those 3 trades. None of them have been de-risked, so I have my risk exposure still on for those 3 trades. I scanned the market, looked at all the combinations of the G8 currency pairs. I did not see any setups that I liked. There were some things on pound Australian dollar that I thought were a little interesting, but ultimately, one of the things I really want to see, and one of the adjustments I've made to my trading this year, is to look for, before I put a trade on pound Aussie, for instance, I want to see signs of, if I'm thinking about going long pound Aussie, I want to see signs of strength in the British pound against other currencies, or signs of weakness in the Australian dollar against other currencies. So I really want to participate in broader trends. I think that's something I found that really improves my win rate, which is obviously something I'm interested in. That's about it for my trading. No new trades placed today. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.